Hello, everyone, and welcome to Currency Exchange, a NatWest podcast series all about foreign exchange markets. I'm Brian Daingerfield. I co-head the G10 FX strategy team here at NatWest, and I'll be your host today. And today we're going to talk a little bit more in depth about the French election, what the upcoming parliamentary election, what that means for markets, what that means for currencies. And to do that, I'm very happy to be joined by Joann Spadigam, who, if you listen to our sister podcast, Bondcast, which focuses on interest rate markets, then you'll be very familiar with Joann. She is a EU rate strategist for us here, and obviously very busy recently, given everything that's going on in France and the euro area as a whole. So Joann, thanks very much for joining.
Thank you for having me. Exciting times.
Yes, very exciting times. Elections all over, not just in Europe, but also in emerging markets. We'll also have one here in the US in just a couple of months' time. But let's certainly focus in on the near term. On Bondcast last week, you and your colleagues on the rate side went into quite a bit of depth on the French election and sort of the initial reaction in markets, the big widening we had seen in OAT spreads, for example, relative to bunds. I want to ask you to sort of go through the lay of the land, sort of what's happening here, why the markets have reacted so strongly, but also what's new in the last week. It seems like things have calmed down a little bit. Is that right?
Yeah, so like you said, Brian, I think the start of last week was fairly volatile, just because I think there was this element of surprise in the election being announced by Macron at this stage. So that did come as a surprise to markets. And I think clearly, we're looking at the polls of the last week, and the right does have an advantage over Macron. It looks like the RN party is polling at around 33%. The far left is polling at around 28%, and Macron at around 18%. So there is quite a disbursement or an amount of dispersion between the parties, but I think it's fairly clear to see that between the far left and far right, there is quite a close call, really, and quite close polling in that sense. So I think into the weekend, or even during last week, there was also a bit of uncertainty about whether the left could form a coalition and whether they would stick together. And it very much seems to be the case that they have. I think since the weekend, there's been a bit more of a calm in markets, if you will, just because I think over the last week, there's not been too much noise in terms of political headlines that have been impacting the market. It seems that the election campaign has started. There will be a prime ministerial debate next week, which will be in focus. And it seems like there isn't too much volatility at this stage because of the fact that, we've kind of started, the left have decided to stay together and the right are, of course, together. I think the other fact that is impacting the market as well, and in a positive way to some extent, is the fact that both left and right sides have seemed to roll back a little bit on fiscal spending plans. I think that really is the key for the market. The reason why people are worried about a far right or far left government is because actually it does bring fiscal constraints and fiscal policy back into focus. And to remind listeners, there was obviously over this year lots of focus on France's rating reviews and what that means for their ratings. They were downgraded by the S&P recently. And one of the key concerns is this fiscal deficit picture. Just given that, the deficits for 23 and 24 have also been revised up. So there's lots of focus on fiscal. And I think that dialing down of fiscal spending potential definitely does come as a positive for the market. Over the weekend as well, Le Pen did note that she would be happy to work with Macron. So I think the far right and the far left are showing signs of moderating to some extent, which is helping the market be a bit less volatile this week.
Do you think these moderating comments are maybe just some pre-election positioning from these two extremes? Or is this something that we think the market should be paying a bit more attention to? I know, certainly you're absolutely right that I think this has provided some calm, though I do wonder if, whether, there's clearly, these parties want to show the French people that they, are able to govern, right? And that they're not going to govern in such a way that would cause volatility in financial markets and volatility, right? But is this something that we think is credible from them, or is this some pre-election, sort of pre-election signaling, you think?
So it's interesting. I think, obviously, I think with the far right, they've been quite anti-EU in the past. Le Pen was obviously campaigning with a Frexit campaign in 2017. So they've moderated that stance down considerably since then. I think that if Le Pen does, or if the right does come into power, that it does mean that even though we may not roll back on EU relations, it probably means there's a lack of unity going forward. So in that respect, I think for the EU as a whole and for the EU project, the rise of the far right is not necessarily a positive there. I think in terms of fiscal spending, it's a little bit tricky just because I think France will be put under an excessive deficit procedure by the European Commission, which essentially tries to get them to reduce their spending going forward. So I think they are in a bit of a tricky position, and it seems like they are seemingly being comfortable with moderating that spending downwards. I think there's obviously implications for the spread if they decide to come in and spend lots of money. It obviously will affect funding costs on the way forward. And to be honest, I do think that if I was Le Pen and thinking about the 2027 election, if you do have an absolute majority now, I think in order to prepare for the election, you'd want to have a government that's well respected, that seems like it knows what it's doing, to be able to really capitalize on that chance and go into the 2027 election knowing that the public supports you. So I do wonder if to some extent it's also been driven by this fact that they're playing a longer game and it's not necessarily just a short-term game at this point. So yeah, I mean, I think there's a bit of both. I think on the EU point, longer term, it probably does become a sticky point. But in terms of fiscal funding, I think there's a lot more focus on that. So perhaps they really are moderating that for a good reason.
Yeah, I think that's a good perspective to say that there's two sides of this, right? That there's a short-term angle and then there's a more medium-term angle. And certainly, the far right in particular, the implications as far as their relationship with the EU and, the previous sort of campaigning on the sort of France's future within the monetary union. There's clear potential feed through for the euro from those types of fears if those were to start to, say, reaccelerate. But it certainly seems like there's been a moderation both on a longer term trajectory, but also sort of on a shorter term trajectory from, I think, both extremes here. Just thinking about how the French elections work, can you talk a little bit about this sort of two-date system where you have first round and second round elections and how that looks like, based on the polls now, it looks like it paints a pretty dire picture for Macron and his party, just because of how the left is unified. It looks like Macron has a chance of really getting almost shut out in this election, despite running, slightly below 20% polling. Can you talk a little bit about some of those the intricacies, the nuances of how the French elections work?
Yes, it's a pretty interesting system in the sense that now what we will have is essentially 577 mini elections. So there's 577 seats, and I think within every seat there will be a competition between all of the parties represented. So it's fairly interesting because in some areas Macron's agents are not even being put forward. So out of all the 577 seats, not every seat will have a Macron candidate stepping forward. So I think besides the fact that he is behind on the polls versus the far right and the left, it does also mean that he just has fewer seats where he is contending. But obviously what that does mean is that there's another more neutral party there and present at that juncture. It's interesting because I think that the coalition of the far left essentially detracts some of the votes from Macron, because it does mean that more central left supporters might go to support the left coalition instead. So the fact that the left does exist at this point has come as a negative for him, just because if you have to choose, you've got quite a lot of choices at this point, and you've got a two-stage system. So at the end of the day, I've heard this quote a few times, for the first stage you vote with your heart, and the second stage you vote with your head. So I think the chances of Macron's party making it to the second round are quite small because of the fact that there's a lot more to choose from in the first round, and then once you get to the second round, there's not many to choose from. You kind of have to side with the left or the right. And that also becomes an issue because if Macron supporters don't feel compelled to vote, particularly in the second round, it could mean that more votes go to the far right, actually. So I think there's a lot of intricacies, as you say, Brian, and I think that there's a lot of uncertainty because of it. There's quite a lot of seats, I think, that will be contested in the sense that there's a pretty small space that can flip seats quite quickly. So I think that leaves the election outcome quite uncertain. But I think what seems more certain is the fact that Macron probably will not do as well this time around.
Definitely interesting as well that, even if you get into a scenario like you said, where in a lot of these small local elections, the runoff election in that second round on the 7th of July will end up being someone from the far left coalition versus someone from the right coalition. And maybe that gives centrist voters, the Macron loyalists, if you will, maybe an opportunity to play kingmaker here. And I mean, like you said, vote with your heart, vote with your head. We've seen several times in French elections in the past where far right parties do very well in the first round, and then sort of the main centrist parties, they coalesce around an alternative candidate in the second round. Macron voters, in that sense, I feel like they have an opportunity to make their voices heard in the second round between, admittedly, two alternatives that they probably did not prefer. But like you said, if they just end up sitting out the vote, that could have implications as well. So I do want to ask you about specific scenarios in terms of what the French Parliament looks like at the end of this, when the elections are said and done. How are you feeling about do you have a loose base case at the moment? And what do you think about the prospect of a majority for the left coalition versus a majority for the right versus something in the middle? Which of those scenarios do you think is potentially has the largest impact on spreads and almost by definition also on the euro currency?
Yes, it's an interesting question, just because I think that we've been talking a lot within the team, at least, about what our base case should be. And it seems like a very loose base case at this point, just because of the amount of uncertainty in the small, I suppose, very fine line between a left or a right winning. What we think is a base case for now, with, like I said, a loose base case, it's the fact that we think that there will be a relative majority for the right. So what that means is that they don't win the amount of seats required to have the majority in government in an absolute sense. So they've got, I think you need 289 seats to be the majority party. So they might not get to that number, but that will mean that essentially they have less power in terms of trying to push things through into government. But I think what the biggest, I suppose, shock or surprise would be that really just trigger this widening to like higher levels. I think that would be an absolute majority for either the right or the left. And I think at this stage, it's interesting in terms of what could be more extreme, because as I said, the right have started to roll things back in terms of what their spending agenda will be. The left have a spending agenda as well, but they might counterbalance some of that with taxes, for example. But I think just based on estimates I've seen for fiscal spending, it does seem like the left's program for spending is just higher than the right's is at this stage. So I do think perhaps the left government coming into power with an absolute majority and being able to push their agenda essentially might be a bit more market negative, and I suppose more of a surprise versus last week than the right taking power. So, I think for spreads, we do think it could get to 90 to 100 basis points in terms of the spread to bunds. So 10-year French spreads to bunds. So that would be in one of the surprise scenarios, like it could get to that level, even perhaps more. But I think that's probably something that we'll get more information about, if that's a possibility, even following the first round of elections.
Yeah, I think that's really interesting. And I mean, I listen to you sitting here in the US, and I think about the US election and the sort of scenarios that we've posited as well as relates to a Biden versus Trump presidency. And we see something, I think, very similar, where both sides are looking at the potential for additional fiscal expansion if they win with mandates, right? If they're able to win with majorities, in our case, the House and Senate. In the case of the parliamentary elections, it would require just an absolute majority in France, right? But we're looking at the potential for significant fiscal expansion in the extreme cases where one party wins a full majority, whereas in the middle, if you end up with something a little bit less, maybe a little bit less of a mandate, a relative majority rather than absolute, maybe that's the scenario where, from the market side, that is sort of seen as the better outcome. Because you just don't have that same fiscal impulse coming through. You don't have that same that mandate. Neither side gets a big definitive mandate to actually expand fiscal policy. If we get a majority, an absolute majority for either the far left or far right, the far left coalition or the far right, and we do see further pressure on OATs versus Bund, say up to 90, 100 basis points, as you mentioned, could be possible in that kind of scenario. Where does the ECB come into this picture? Because we know they have certainly in the past, as we go back in the history of the ECB, there's been plenty of opportunity for the ECB to create programs and to step in strategically to prevent volatility in bond markets in Europe. What are the options available to the ECB? Do you think they're at a point now when they could consider stepping in to provide some stability? And if they're not, what kind of conditions do you think would need to come into play in order to get the ECB to consider stepping in?
So the ECB have said that, they are watching market conditions closely. But I think, for them to be able to actually act, I think we need to see signs of unwarranted stress in financial markets. I think unwarranted is an interesting word here because obviously French elections for now are French. It's a French problem. The fiscal scenario is going to be a French problem. Obviously, the EU and potential EU unification is a European issue, but for now, I think lots of focus is on the fiscal side, which is one of the key issues at the moment. So, I think that for the ECB to intervene, we have to see fairly large one-day moves in markets. We've not seen that for now. We've seen obviously a pretty big widening, but it's not like we're seeing 20, 30 basis points a day. So I think we'd have to see a fairly sharp upwards move for them to have to intervene, firstly. And secondly, I think that what also matters is that the rest of Europe, so periphery spreads, for example, whether those are taken up with France. And I think if we get this fairly wide spread increase in spreads, a market that looks a bit more uncontrollable, which versus what we have now, then you could really see the ECB having to intervene. At this point, it seems like when we get to certain levels, there still is some demand. We get to resistance levels, and it kind of lingers at those levels. Like we haven't really pushed significantly past 80 basis points in 10-year or 80 bond. So I think that we haven't got to levels now where the ECB is concerned. It seems relatively orderly, like we've discussed already. This week wasn't really too volatile. So I think we'd have to see financial conditions significantly stressed for them to intervene. On what they could do, I think the most obvious solution here would be to use PEP purchases. So these are pandemic emergency program purchases that they have done in the past. And unlike their usual bond buying programs, the PEP does have a level of flexibility. So the ECB can actually buy more of one country's government bonds versus the other. So here, I suppose in this scenario, they'd be buying OATs, buying BTPs, for example, versus buying less bonds. So that actually starts to roll off in July by 7.5 billion, but they still have around half that extra in space to be able to adjust that. So PEP, I think, is a first call if they have to do something. And it's a direct kind of way they can do this, right? They directly are buying these bonds and helping the market out in that sense. The second instrument they have is called TPI, Transmission Protection Instrument. I hope I got that right. But the TPI is an instrument that's never been used before, but essentially also can be used to address fragmentations and spreads. This does have a few more conditions attached to it that are rather vague. So I do think if they had to use it, the ECB could use this tool as well. I think politics is a bit tricky. I don't think they want to use it just to help to spread out like now when there's a political situation. Rather, again, it's about the whole universe of European spreads, and it's about unwarranted tightening in spreads. And to some extent, you could argue if there was no risk premium at all in the French spread going into this European election, that actually higher spreads are warranted. So maybe this isn't an unwarranted shift in the spread picture. But yeah, so TPI is a tool available, but unlikely to be used as it's never been used before, and they have PEP. The last question is, could they cut rates as a result? I don't think that they will. It seems to me a fairly indirect way of addressing this issue. The rate should be used for inflation and reacting to inflation, and not necessarily to helping to calm spreads down. And to some extent, yes, it will have an impact on addressing spreads, but not to the same extent as buying a bond will, which is a very, very direct source. So I don't necessarily see a July cut as being on the table for now, based on French political instability.
Yeah, you just previewed exactly where I was going to go, which is, for currency investors, we tend to focus a lot on short-term rates because short-term interest rates tend to do a lot of the driving in currency markets. 2-year spreads, US versus Euro, for example, tends to be a pretty good driver in terms of certainly a variable to consider when you're thinking about currency valuations and also relative carry is defined by short-term interest rates. And so if this was something that we could see as potentially leading the ECB to be cutting rates more aggressively, then maybe the feed through into weaker euro could be even stronger here. But it certainly sounds like that's not your base case, that there are other options available to deal with this specific issue if it were to move into an unwarranted or unjustified state, as you nicely explained. I do want to ask you before we go, what is your expectation for the ECB for the remainder of this year? We certainly talked about the potential for how the French elections may or may not influence the broader picture for spreads and for euro. But what's your base case at the moment for the ECB? We know they delivered a cut once this year. What are you thinking for the rest of the year here?
Yes, it's been fairly interesting just because I think after the ECB meeting, ECB speakers have been fairly contained on telling us what they think they will be delivering for the year. If you think about just before the ECB meeting, they were saying something like 2 to 3 cuts for this year, and that was the hawks in the committee saying that. So hawkish base case was 2 to 3 cuts a year, and they've really been tight-lipped on that since then. I think to us, it seems that the increase in the inflation forecasts at the June meeting means it is unlikely that we see a cut in July based on that. But we do believe that the inflationary process in Europe will continue to normalize. So further cuts this year are warranted. And to be honest, the September and December forecast meetings probably make the most sense in terms of when those cuts come, just because the committee does have more information at that point. They've got a renewed sense of forecasts, so they can take a more, I suppose, bigger picture view on what's happening in the economy and happening to inflation as well. So I do think that in terms of the ECB, we are sticking to our September and December cuts for now. And it does seem like that should be broadly supported by the ECB based on that comments before the June meeting.
Great. Well, thank you very much, Joann. Thank you so much for joining. Really appreciate you breaking down some of the nuances and intricacies of the French election as we look ahead to not just the French election, but plenty of other big events upcoming in the weeks ahead. So thank you very much for joining, and thanks to our listeners for joining as well. If you enjoyed this podcast, please consider giving it a like and also subscribing to our channel so that you can get our latest podcasts the moment they're released. Thanks very much.